Going, we're joined by Mr. Binod Kumar, the MD at Indian Bank, on the back of their earnings. Mr. Kumar, talk to us about the book. Talk to us about how much of it is fixed versus what percentage of it is the floating rate.
Yeah, floating rate percentage of loan book is around 46% is my MCLR and around 36%, 37% is EBLR and some is fixed.
And margins, Mr. Kumar, have come in around 3.3%. Talk to us about what's playing out with regard to the margin number. We've not seen a lift like some of the other PSU banks. Contextualize that for us.
I mean, margin, if you see this quarter margin, we have ended up at 3.40 against a given guidance of between 3.15 to 3.30. So I see there may be 1 or 2 basis point moderation in this quarter because rate cut impact of 25 basis point will come in this quarter. That is the reason I am not revising the guidance and keeping it at around say 3.30. Maybe we'll do better than that, but exactly not revising the guidance.
Okay, and Mr. Kumar, talk to us about in case if there is a rate cut going ahead announced by the RBI, how is that going to play out for your NIMs?
If there is 25 basis point rate cut, then impact on my book may be around 5 to 6 basis point on NIM, not more than that. Because we are maintaining various strategy in loan book also. We are also, as a part of a strategy, shedding some of the low yielding advances. We are consistently focusing on increasing CASA, and if you see in this quarter, my CASA growth is 9.86%. And CASA share also, it has inched up marginally, although from 38.87 to 39.08%. Also, as a part of the strategy, my bulk is at the same level what it was in September. So we are taking various measures. So that's why we will be able to maintain impact of between 5 to 6 basis points.
And Mr. Kumar, you've done 13% plus in terms of your loan growth, YOY. Would you give us a sense of what your guidance is for FY26, and would you like to hike it is what I want to mainly understand.
I have given guidance between 10 to 12%, but up to this quarter it is 14.2%. So maybe we'll do better than that. Around maybe 13 to 14% we will do.
Progress.
Okay, and talk to us about the progress that you've seen on the recovery front. How is that shaping up for you?
A recovery pipeline, we have a good recovery pipeline, and we have given guidance of a recovery of between 5,500 to 6,500. Out of that, we have already recovered 5,300. And quite hopeful that we will surpass that number also. Even for next year also, we have good pipeline, and of course, there will be some moderation. That guidance I will give once this quarter is over, Q4 is over. But next year also, I mean, hopefully, we will be able to have a decent recovery numbers and good pipeline. Say my gross NPA is 14,000 crores, net NPA and the TW book around 42,000 crore. So 42,000 on 42,000 book, we will have some decent recovery.
Okay, and on ECL provisioning, talk to us about how this new framework regulation is going to impact your capital adequacy. And how is it going to impact the bank all the way through FY30?
See, we have not calculated because that is still a draft guidelines, and we expect some some revision in the guidelines. So we have not exactly calculated, but we have already started providing for keeping in mind the ECL guidelines. Like in last quarter also on SMA1, we have made a provision of 5%. This year, this quarter also, I have made additional 5% provision on the SMA1. SMA2, we are already providing 10%. So keeping that framework in mind, we have started maintaining providing provision for the accounts, and I expect I will not need 5-year gliding path, and that I will complete definitely in first year. Number of quarters I will have to see in how many number of quarters.
Right. And Mr. Kumar, talk to us about the capital raise in FY27. Is that going to be strengthening your CAR going ahead?
Frankly speaking, I will not require, because my capital adequacy presently is at 16.58, and with the flowback of the profit, it may touch around 18. So with the 18% capital, I will not require any capital raise for the business growth. But if some good opportunity is there, we can look for that.
Okay, Mr. Kumar, thank you so much for coming in and speaking with us, giving us that perspective. We'll let you go on that note. That's, of course, the management of India.